Hey, other side, I'm gonna make you and Leslie co-host if that's okay with you guys, just to free up some space. All right, so we'll let a few people join, and then yeah, other side. I think if you accept the co-host thing capability, you'll be able to speak. There you go. Yeah, perfect. All right. Hope everyone's doing well. Mitchell, was your wedding pretty good?
Yeah, it was a great wedding.
Not, I mean,
What's up,
not.
guys? Happy Wednesday.
Hey,
What's up,
Jimmy.
Jimmy?
Yep. Hope you guys are doing well.
Yeah, man.
Yeah, can't complain. Just catching up.
I didn't hear no bell, man. My portfolio's burning with this tax loss harvesting, but I'm going to see this bad boy through.
That's good. That's good. Only 2 more days to get through, Jimmy. So, with that in mind.
I've been in quad four for all of most of this year, so
Yeah, it's been a tough 6 months, really, right? Since the end of late May, depending on what you were in.
I still got a lot to be grateful for. I got a roof over my head. I'm
Oh
in good
yeah,
health.
totally.
I'm eating all right. Got a good workout.
That's good. What are you shopping for at IKEA?
You know what? With this
Just
Omicron thing, a lot of the teachers at the daycare have been sick and taking some time out. So at the
got
end of
it
the year, the kids are out a little early. It's still a little bright outside. It's like another way to babysit, right? She
for
plays
sure.
around with all the furniture. We get some ice games.
Love it.
So
Get love it. Get some meatballs. It's perfect. Awesome.
that's right. It's 3 to 5 meatball
Well, I mean,
special.
yeah, it's the best deal going, right? And then, yeah. Anyway, guys, you're welcome. Thanks for joining. I think I see some recurring faces here. For those that are new to this process, Wednesdays we just kind of take a look at the notebook. I am kind of back in the saddle after a few days off, so really catching up here myself. To be perfectly frank with you, and it's very very open kind of dialogue. If you got a question or comment, please just request to speak. It's very, it's kind of come one, come all. Chris, Thousand Era FX, welcome. I expect you to be speaking here soon as well. I hope everything's good in the UK. But I mean, to kick things off, I don't know. I mean, Leslie or Mitchell, do you have anything that was standing out to you? Otherwise, I can kind of dive into a couple things, I guess.
I'm catching up, brother. So
All right.
I was buying some TLT, SHY, and BNDD today.
Yeah.
Trimming some things near the top end of the risk range and just getting ready for the first quarter. So yeah, why don't you guys kick it off, and as
Yeah.
I'm reviewing, jump on in.
Perfect. Yeah, so I mean, in terms of what I'm seeing, again, catching up over the last couple of days, so kind of a lot of risk range writing down, caught up on some macro shows as well, and that kind of thing was really kind of just took, I don't know if you noticed, but was out, you know, outside of the family a lot. It's cold here in New England, but didn't stop us at all. And now, as you said, Mitchell, there's a lot of stuff at top end of the range. I had a lot of kind of trailing limit orders that got tagged at basically going into the close. The VIX pretty much, tried to go to the low end of the range at 1601 today, but really kind of bounced right off of that. And so it'll be interesting to see kind of if there's any follow through to that VIX signal tomorrow, and then whether or not that risk range widens a little bit more. Yesterday it was at 1558 to 23, and it kind of tightened up to 1601. So that's a pretty big higher low there. So obviously, that's something that I took note of from day over day. And then the other thing too, obviously, I think there's a decent amount of people that are kind of caught in this oil short position that obviously Keith has had on, myself included. But I certainly added to that today. I think this is kind of to me, there's a bit of a near term, and then obviously near term pain, but then kind of looking into as we go into Q1 and then into Q2, and we've talked about this on the last couple calls, kind of that quad one, kind of quad four environment in Q1, and then a pretty definitive quad four in Q2. So I don't mind stepping into this year even with a little bit of pain. Again, I'm using a SCO as the short in my long only accounts, and it's a great way. Again, I'm kind of just building that position. It's about 250 basis points right now. I added some basically on Friday, or what was it, I guess Thursday last week, and then some more today. And if it's up again tomorrow, oil that is, I'll add some more. I mean, to me, this is kind of like a similar style or similar kind of approach to the fixed income side of the house, which I bought a bunch of today as well, like you, Mitchell. Kind of really my first foray into the fixed income side of things. I've been waiting for sort of this pullback. Obviously, we went well beyond what was the risk range on the 10-year. I think it tapped out around 159, I think it was. And so that was a great kind of overbought situation or oversold, whatever, however that goes on the 10-year. And that was a great opportunity to step in. The other thing that's interesting to me too is kind of going beyond the U.S. Europe still looks pretty strong across the board. Netherlands, I know, got taken off the ETF Pro a week or so ago, I believe it was, and then but there's a lot in Europe that looks pretty strong. The DAX obviously still bullish signal. The Nikkei went from neutral to bullish today. I'm still short that one, but got it on a really tight leash. Because if it breaks out, it's got a big time kind of move higher here. But I think this may be just a bit of a head fake with the U.S. dollar situation happening, that kind of thing. And obviously, we're kind of not quite at the low end of the range on the dollar, but certainly was getting there. Where were we at? 95.90, right? So I mean, 10 cents off basically of that low end of the range. So I suspect kind of that Nikkei. But the biggest opportunity to me right now in terms of emerging markets would be China. I certainly added the KBA that obviously went ex divvy today. And I was not holding it into that. So, I gobbled up about 100 bips of KBA. I think China is going to be really interesting going into 2022. You likely saw, as Jimmy kind of mentioned, some tax loss harvesting, and or guys just not wanting it on their books going into the end of the year, having to report that they've been long China all year long. So, yeah, I mean, I think that's kind of what's sort of jumping out of my book. Tech has obviously been super strong. XLK, Hedge I Fig basically wrote a whole note on, or a bunch of a bit of a note on it yesterday in terms of how it's been a great performer the last 3 years. I thought that early look was phenomenal. If you haven't read it yet, definitely do so. It was a great kind of hybrid of both real estate and tech, and I suspect even with quad four. I mean, if you remember last time in kind of 2020, tech was still a top performer, and Gavin mentions this all the time that the Fang M, or however, I always forget which way it goes, but it's basically a whole macro environment and macro exposure in and of their own, and that you're kind of consistently get at least a big winner to ride each year. I believe this year was Microsoft, but it's definitely one to keep an eye on, because if you get a dip, that's I'm still going to be buying tech, REITs. Probably lay off the consumer discretionary XLY or kind of related entities under that, just because it doesn't perform as well in obviously a quad four environment in Q2. So that's kind of how I'm positioning my book right now, in terms of just generally thinking about that kind of quad one class quad four in Q1, and then the quad four that's looming in Q2. But I think something that's really important to note is I don't think you want to get too ahead of your skis here on that quad four, right? We basically had a bit of a pull forward of quad four at the beginning of this month, and obviously we've got kind of relatively low volume, bid up this whole last week, but it doesn't mean that it can't go higher going into early Q1. the Russell as well stood out to me in my notebook, and it'll be interesting to see kind of how that continues to play out. Right, it went it's back to bullish trend. We're not quite at the top end of the range, and so haven't thought about shorting it yet. But obviously, if we get some volatility here in the first half of the month of January or going into options expiration in that third week of January, it could get a little choppy. But Leslie, got anything to add? Or
Yeah, so I was adding to bonds today. Missed that little bounce in gold, which was pretty strong. So that was interesting to see that, little V recovery right off that one little bounce. And then the main thing is the biggest strength I see is ITB and XLRE. Those are the only ones where the top end is reliably going higher high.
In the big higher low this morning, right, for XLRE?
And it's riding the top, and then the range goes a nice chunk above. Although I did see the FANG stock starting to do that again today. We started getting, where they've been consolidating a little bit, and the range finally started going up again. So yeah, that was pretty much it. I'm not doing anything with small caps right now. I shorted Playboy for a minute.
I apologize. I misspoke about the 10-year. I went to kind of 156 versus I said 159. I apologize for that. So that's my bad. But no, I'm not touching small caps. In fact, I booted the rest of my buckle that I had today on obviously strength. And yeah, I'm definitely shoring up my book. Small cap discretionary, was an ETF exposure I had. So I kind of trimmed a bunch of that as well. Yeah, I don't really. I still got legacy positions like Penn and DeFry and Playboy still at the top of the kind of in the top 10, but it's those are more in the retirement account for that kind of longer term opportunities, in my humble opinion.
Yeah. The only other thing was that, like Robert was saying, hitting the stops in SPY and Qs on the way out of the day, and that tailed off again pretty strongly right at the close. So it seems to have been a good call.
Yeah, definitely.
Hey guys, I got a few points to add, kind of touching on what some of you guys have already said. I also bought more TLT today, bought some TLT, bought some options. I will say, when you look at the consensus positioning, people I think have been, I want to make sure I get this right. Looking at the 2-year and the 10-year, it seems like the consensus has almost been a little bit offsides. And I've noticed recently the 2-year went back to bullish trend, right? So that it's been making some higher highs in this kind of the 70s. The 10-year is definitely still neutral, and I think over time, going from quad 1 to quad 4, we're going to want to get more exposure. I do think if we have a bit of a melt up rally in the next, let's say, week or two or whatever in January, perhaps, that the 10-year might show a little bit more weakness. So I'm still scaling into that position. I'm not at max size yet. I don't know where the trend line for bullish would be, right? Or bearish, bullish, depending on how the risk range is presented at the top end. I don't think we're going to kind of get out.
I did notice on the 10-year. You're talking
on the 10-year, the upper bound. Like, is it in the 160s maybe?
No, I think it's we got the trend last week at 130 at 1.35.
Right.
So I think good question. You keep chatting. I'll see if I have it in my notes.
Okay. Yeah, that's fine. Yeah. So just something I noticed. Again, it could be just a function of low volume, but so I'm not. I'll find the right spot. If we do extend this kind of Goldilocks scenario a little bit longer, just the opportunity cost. I'd rather be in some higher flyers than in bonds, but it's maybe for this it's better to be a little bit earlier. Like Keith said, it's a placeholder. Helps with cash and all that. On tech, a couple of things I noticed. I've been very close to Facebook. It's definitely gone bullish. There's some narratives about Oculus being a popular Christmas present. I noticed the last 2 days, though, it tried to break out. It got into like the low 350s, 353, then it backed down. This morning, it opened up at 349, also came back down. To me, that looks like some short covering. It seems like people were short Facebook relative to other tech, or they've been on that trade for a while, and so maybe they're closing some of that out. I would have loved to see some more sustained buying pressure. I think 345, 44 was kind of trend. It has 1 month and 3 month price momentum now. 3 month, I think barely. It's about flat. So just something to look at. And in Amazon, the risk range is tightening. It's again, for whatever the reason, it's one of the biggest components in XLY. XLY has recently moved up higher, but Amazon hasn't really participated in that. Fundamentally, I think you guys have heard Freeman's pitch on Amazon, their CapEx investment this year, how it'll pay dividends next year. So maybe there's a pair trade if I'm not super, in love with XLY, some of the components going into a quad four, but I like Amazon as a company. It's been basically flat all year. So I think there are reasons why it could catch a bid early next year, but I don't have a position. I'm just tracking that a little bit. I want to see where that goes. And then yeah, we'll get to the rest. I think one of the things you might have not talked about, I think, was it Caffeine Addict brought it up this morning, just on the VVIX ratio, looking at volatility, how we're not out of the woods yet. RVX, OVX, Vixen, VIX are all kind of starting to get towards a lower bound. I noticed that VVIX was still in the 113, 114 range. It crashed today. It came down a little bit more, but that ratio being north of 6.5 is it's it could be a head fake, right? So like I'll enjoy the market ride up, but definitely for client money, I'm not all in the market just because of that setup. But maybe there's a catch up trade, right? I'm talking my book. I hope some of these small caps get a bid back. Whatever tax loss harvesting is happening, like it can only work if the markets that are at all-time high. If the markets are cratering, a lot of these small caps that are out of favor are probably not going to get love in a systemic way.
Yeah, those are great points. And the VVIX close kind of just under 110. It looks, looks like I hadn't actually looked at that going into the close. So, great call out there. Considering about a week ago is at north of 150. So big move there, and obviously big move on the VIX too, right? As I mentioned, kind of down, probing the low end of the risk range. And so that's a great call, Jimmy. Thank you.
Following on that, VIX might not be done, low volume sort of environment we're in. I am regularly putting on a starter position in something that looks like a decent spot. It doesn't move, I take it off. Just not really letting things sit overnight if they're not kind of immediately going my way or showing some sort of signs of strength. Kind of feels like the default might be falling off overnight. So I'm just kind of pulling them out. Same thing with, Qs and SPY, kind of at the end of the day. Can always put it on again in the morning.
Yeah, totally. Yeah, Joe, I mean, I think you mentioned this morning that you sent a message around you're about what, 25-30% net, net short, something like that. Fracty Cat, sorry, Joe Cat. Because I'm definitely getting close there. I'm sitting on still a lot of cash, but not only was I selling and buying bonds, but I was definitely shorting a bunch of stuff today.
So what did you short today?
I shorted tech, XLK. I shorted financials. I shorted energy. I shorted high beta. I shorted just the S&P.
Yeah, I'm about as short as I've
Oil.
been in all year. It's a lot of got bigger in oil. I'm short the inflation ETF, INFL. I mean, it's you kind of got to look at this move as is it sort of continuation of the trend that we've seen, or is this a counter trend kind of bounce into the new regime? And I'm kind of playing it that way, that this, like if you fell asleep the last 2 months and you looked at it today or the last couple of days, it kind of looks like quad 2, 10 years up at the top of its range. Inflation plays are kind of bouncing, oil's bounced. And, I'm kind of leaning toward, there are still a lot of people who are offsides on that pivot. I think Hedgeye has been a little early to call that pivot away from inflation. I certainly don't see that as consensus that we've hit peak inflation, peak hawkishness, peak a lot of, inflation linked aspects. So that's kind of the way I'm looking at it. The pivot kind of caught me off guard into and through this quarter, where there were some points where it was a little rough to kind of hold those inflation plays. So I'm taking this as a gift, and it could be wrong, but that's kind of how I'm seeing it. And you said it right when I got on this call, which I think is a good point to raise, is like, don't get too overeager to position for quad 4 and kind of do it incrementally. And I think that's certainly how my portfolio is positioned. It's not all in, all quad 4, but it certainly looks different than it looked a couple weeks ago.
Yeah, I think that's spot on. And yeah, I mean, from an inflation standpoint, just from an anecdotal standpoint, I mean, it was definitely a key topic of discussion over the holiday weekend at the Christmas dinner table with aunts and uncles and stuff like that. It was pretty funny. I was about, kind of the only one saying, hey, this is peak, right? I mean, don't worry about that lumber, that deck that you're trying to build. Just wait till the spring, and I think you'll get some better prices.
Yeah, and people are saying, like, it's people who don't follow, markets and rate of change, I think, as closely as we do and as Hedgeye Nation does, I think, are always a step behind. Just anecdotally, I had the same sort of laugh to myself both ways with refinancing my mortgage about.
Mm-hmm.
It was when I first bought the house in 2019, and then when I refinanced last year. And the broker that I was speaking to, like, he had it wrong both ways. Like he thought interest rates were going to continue to go down when we all kind of saw that they were turning. And now I think there's consensus out there that interest rates are going to continue to rise for the next 6 to 9 to 12 months. And here we are on the other side of that again. So it's just it's interesting seeing, kind of the view that we have versus everyone else kind of out there in the real world, so to speak.
Yeah.
Joe, do you mind if you're shorting bullish trends more so for short term because they're at the top end of the risk range, thinking quad 1 is still around, or you're shorting them thinking that quad 1 short-lived and you're just getting ahead of the possible quad 1, everything goes up motion?
It's a good question. It's a bit of both. I mean, it's a lot of the things.
So,
a lot of the things that
Joe,
I'm sure. Sorry.
Just for everybody, that was Mitchell, which is Other Side Asset Management. One of the things I'm going to try to do better at is sort of, dictate, who's speaking when, right? So that was Other Side Asset Management, and now we're back to Joe Cat, Fracty Cat. Go ahead.
Yeah, and I think the things that are. The lazy answer to your question is it's a little bit of both. I think some of the things that I've been short were bearish, or at least in my system were bearish trend, and have since started to creep back to bullish. I think IWM would be a good example of that. But I still have inflation. INFL actually just went back to bullish today. So it's a good call out. It's certainly not something I'm going to stick with for too much longer, but I'm sizing it appropriately, where the fact that some of these things are starting to creep back to bullish trend, a lot of the inflation linked stuff, I'm trying to keep that in mind with the macro view that we all kind of have and that Hedgeye has, which is that inflation has peaked. And so these inflation linked things, quad 2 linked things that are starting to creep back to bullish trend, I'm going to lean toward that as a head fake more so than that's a continuation of what we've seen for the last couple of months. I hope that answers the question.
Yeah, that's fair. And I'm not, it's not a gotcha or a setup. I'm curious to see what your thought mentality is. I mean, as you have, as Robert pointed out, the 10 years moving through the top end of the risk range, I'm always keeping in the back of my mind that, beach ball underwater, right? As Keith always describes. So, some of these things are moving in a direction, and I keep the dynamic in the back of my mind with active sellers gone, passive buyers continuing to buy through the new year, and January 2nd or 3rd or whenever we come back to work becomes a completely different day where people say, holy shit, I got to position my book. What am I going to do? And they start to hit those names that have been overbought and, buy the names that have been kind of, you know, uh, uh, tailing off, if you will. So, yeah, I appreciate the color from your mentality. Thank you.
Yeah, go ahead,
No,
Rob.
go ahead, Joe.
Sorry.
No, go ahead.
Yeah, I was just going to add that it's my book positioning is slowly phase transitioning from comfortably short to uncomfortably short, and just mostly with respect to it's never comfortable when you're short and things are going against you, because that can happen very quickly and rip your face off. So it's a wide breadth of short. I'm short a lot of names, but I'm short very small size in all of those names.
Right.
That just kind of in totality is, I think I didn't even notice it like absolute percentage wise of my book till the other night, that it was approaching a third of my book is short. And I'm comfortable with that, because I feel like my biggest mistake over the last year has been every 5 or 6 weeks leaning too long into those corrections and getting just my face smacked on being too long or too correlated to high beta as that correction starts to materialize. And that's something I'm trying to do differently, is not not kind of walk into that wall, so to speak, that I did far too often in 2021.
I think that's bang on, Joe, and exactly kind of similar thought process on my side, right? Is for instance, kind of selling some of this ITB, right? It's like, okay, I don't really want to sell it, but I made those mistakes throughout kind of 2021, where it was like, okay, this stuff's at the top end of the range, it keeps probing top end of the range. I want to hold on to this. I want to own this, going into basically the next 3 to 6 months. But at the same time, there's it's very probable that there's another opportunity to buy some. And so why not, I was right, we were right on kind of the 17th and the 20th, right, of buying the dip here on certain names, and or basically across the board really. And so why not pay yourself, right? And now I've flipped to that and said, okay, well, I don't really want to sell anymore when I say my triple Qs or my XLK, and therefore I'm going to buy or short. I'm going to short it now, right? Because I think I would otherwise be a seller, and so therefore why not just short it? And I'm shorting it in kind of long only accounts via inverse correlated stuff like TECS is the short tech basically, right? So
yeah, so you guys use inverse, right? Like that's the best thing I think in terms of not getting messed long term.
I mean, yeah, and in long only in a retirement account, I can't just outright short anything, right? So I can't go long short. So yes, that is how I'm doing it, Chirp. So that's the chirper who asked that question.
Yeah. I have a similar thought process to Joe. My and I haven't gone there yet. My thought process is more so, though, keeping it short term if we do see that quad one and everything moves higher. I think this is an opportunity at top ends of some ranges to either trim or, as he said, sell some short, right? If I'm going to sell some, why not short it, right? But I would definitely, in the way I'm viewing it, is I would keep that on a tight rope, tight leash, and take take whatever gains I got in small pieces, because I do still think that we get this quad one, shallow quad four, and then we get an opportunity. Gavin has been talking about, behind the scenes with, our little group, where, as things get closer to materializing as a true quad four, well, then you have more conviction in it, as opposed to a lot of things recapturing neutral or bullish trends, et cetera. So, yeah, I don't think it's a bad thought from Joe at all. I just am thinking about it in a short-term manner, as opposed to a longer-term trade, given what we have staring in front of us.
Yeah.
And I'm not. That's what Joe is thinking either. That's why I wanted to ask him. That's all.
Yeah, Mitchell, I mean, I could have a completely different tune next Wednesday, right? In terms or next week, in terms of, the big boys are back on the table. They're having their morning meetings on Monday, Tuesday, and they're reassessing, right? If this market just keeps freaking grinding higher, right, and we go to, the 71st, 72nd, and 73rd, all-time highs in the SPY in the last 12 months, then I'm going to say see you later, and I'm going to get, completely reverse course, really, at the end of the day, right? Because, I think we're, again, it's right now it's a bit defensive, and then on top of that, it's sort of kind of trying to look ahead, being like, okay, we're at pretty much, very much all-time highs in a number of asset classes, XLK being one of them, and therefore, what, how do I want to try to think about that in the next month, but then also in the next 6 months?
Yeah, and I would kind of sum it up this way. At least I'm thinking about it this way: is for the macro unaware, everything looks fine today. Like today, like this week, today, everything looks like it's looked. Inflation-linked plays are ripping. Reflation is here to stay. Hawkishness from the Fed, whatever. Like that kind of the way that things have been going in the markets for the last couple of months. If you're not thinking the way that Hedgeye is thinking and looking ahead to the rate of change, specifically of inflation, but potentially growth in inflation, if we get a shallow quad 4, then you're not selling, or you're getting greedy, or you're pressing. And not to make this about what we're all doing kind of. I don't want to make it bigger than what it is, but just as an anecdote, I actually reallocated an old retirement account and my son's 529 today to a much higher bond allocation than I had. And I had a very low bond allocation for most of the year, just because I think what's going on in the bond market is a gift. If Hedgeye is right, and I think that they are, and we are moving toward a lower inflationary environment or a slowing growth environment, then bonds are going to do well. And I think looking at the 10-year today, just the surface area of just the price action today and the price action this week, it looks like, the 10-year is doing what it's been doing all year. It's going to keep going higher. Yields are going to keep going up. I think that's a consensus, and I think that that's wrong. That thought could end up being wrong, but that's. I think there's a time to kind of get in gear with the trend, and there's a time to fade it. And just personally, I think this is a point to fade.
I agree with you, and I think you're right on that. Last week, I did the same thing with all my 529s in shop, and the thought process behind that was, one, I think consensus is wrong. Two, I don't know about where you guys are, but 529s at most places only give you 2 moves a year.
Exactly.
So I use this move before the end of the year. That gives me another move prior to quad 4, and then it gives me another move out past quad 4, whatever the Fed
and Q3 or whatever
they try to come with to save things. So that gives me 3 as opposed to just 2. So I set up very similarly, Joe, and that doesn't mean either of us are right. It just means that line. So yeah,
but that was exactly my thought process too, about only having 2 a year. I was like, this is a gift. If 2 days before the end of the year and bonds are doing what they're doing, it just seemed like a no-brainer.
Are you guys any good at fantasy football? That sounds like a Final Fantasy move where you have to get your transfers done before you get
I mean, Chris, not to toot my own horn, but I got the championship game this weekend, baby, defending my title.
Yeah.
I basically just trade all the time. I pick up. I look at the rate of change of players, and it's worked out well 2 years in a row. Hedgeye's influenced it, considering I was consistently the middle to the bottom of the pack up until joining Hedgeye. It's changed my attitude, or mental attitude, and mental focus on many aspects in life, including for fantasy football.
Yeah, I've got my. We were sorting out my son's team this morning because he's had a bit of a bad couple of weeks, and then I was trying to get him to get his head around the fact that his Uncle Dave is like 200 points ahead of him in the league, and I'm like, okay, but if you pick all the same players that Uncle Dave's got, then you're never going to catch him. You're just going to lag him by the same amount. So it's like you're going to have to pick 1 or 2 players, like wildcard players, that he's never going to pick, so that you have a chance that if they do well, you'll be able to catch up with him. So that was the school day today.
I love it. I love it. That's awesome. What are you seeing out there, Chris? And both within your European markets as well as crypto space, that kind of thing. So again, this is a Chris Thousandaire FX is his handle, and yeah, he's our boy from the UK.
So I was looking at gold. I'm liking the fact that all of the gold bugs are really silent at the minute. Like, obviously the price hasn't broken out, but whenever, I don't know, they've been burnt a lot this year, right? So especially when crypto's going down, I was expecting to kind of see Bitcoin's down 7% today and gold is up whatever 0.2 or whatever it is.
Mm-hmm.
But there's just silence. There's absolute silence. And I know it's the holiday and stuff, but it'll be interesting to see how long the silence continues, because then it means that it's probably a good time to start adding.
Yeah.
Because it's been proven that every time that they all start high-fiving each other, then it pulls back like 5%.
Totally. Yeah, I think this 1800, this 1800 level is I won't say critical, but certainly a telling spot in my humble opinion, right? It's either, you're either, this is kind of like the last, if it kind of holds around here, it's likely, to your point, kind of the last, potentially the last little dip, right? Going into Q1, Q2 next year. But, if it kind of breaks, it's likely going to go to the low end of the range. And then that's when I'll be buying it with sort of, both fifths.
Yeah. And what else? Even with crypto down, I get a lot of people now that have finally opened up my DMs. I didn't really realize they were closed. But I get so many people messaging at the minute talking about NFTs, because they've heard me talking on here, and they've said, "Oh, do you trade NFTs?" And it's so yeah, that's interesting. But the other one was materials, so XLB. So that looked interesting today, and so it was the first day that the UK shares were trading. So there's a lot of big miners, obviously in the UK. It'll be interesting to see how that holds up over the next couple of days and into the start of next year. I know I am a reformed gold bug, so I have made the mistake of a gold miner isn't gold.
Oh yeah.
So I have fell for that, but yeah, it'll be interesting to see next year.
Yeah, it's still got an eyeball premium as of this morning, XLB, and certainly the best performer in the last week at 3.55% here in the US. So yeah, I mean, it's definitely creeping up in terms of signal strength. 1 month, 3 month, I think it's sitting right in the middle of the pack. So kind of on a trend basis, it's definitely continues to look better and better. Yeah, it's number 3 now, right above it goes XLK, XLRE, XLB on a 3 month basis in terms of your 3 month returns. It's definitely been a good performer.
It never really gets talked about. I know Keith very rarely talks about it.
Yeah.
I don't even know, like, when everything was going gangbusters, I can't even remember him really pulling the trigger on it in Q2, in Quad 2.
No,
I might have been.
The last time we kind of had it in the playbook was when we had this 4 horsemen, right? It was XLK, was it XLF? Yeah, XLK, XLF, XLB. What was the 4th one?
XLI.
XLI. Thank you. Yeah. That was kind of last time I don't know this for a fact, but I could certainly back check it, or somebody can cross check my math. But I think that's probably the last time, and during that period is probably the last time you hit the button on XLB.
Yeah.
It had a rough period in the summertime, and then ever since that lull, basically, yeah, it's just been on fuego basically late September, even really kind of June, like post quad two, right? That June to sort of really quad three, I guess, really, because it was really the month, the Q3 basically. It was like June until early, late September.
Yeah.
But then ever since then, it's been on fire.
I have a question.
Yeah.
To kind of put out there. Does anyone know how to get old, like basically what? So I'm looking at momentum. I want to try and find out what momentum held in whatever in 2011, 2012, 2013. Does anyone know where I'll be able to find that?
I don't like the ETF MTUM.
Yeah, or any momentum kind of index.
Right. I do
So
not know the answer to that.
If anyone knows, or just send me a message or anything. I don't have a Bloomberg. It's probably on there with one click of a button.
Well,
I don't have that.
My Bloomberg rep. I don't have a Bloomberg yet, but I'm probably going to bring one on board any day. So I have a Bloomberg rep. He's open to email, so I'll email. I can't guarantee. I'll let you know if he does.
Oh no, yeah.
What
yeah,
years?
Great, yeah, awesome.
Perfect.
What years specifically?
As much as you can get.
Okay.
As much as you can get, if it's possible.
Got it.
Yeah, Mitchell. So Chris, that's other side asset management. That just said that. So, Thousandaire FX. I mean, Mitchell. I think you got his handle, but yeah, I think Chris is a pretty big data guy. So as much data as possible, I suspect would be his favorite. All right, so I mean, we've been kind of at this for 45 minutes now. Does anyone out there listening? You guys got any commentary or questions or notebook review? Chirp, I think. Oh, Jimmy's got one. All right, yeah, let's go back.
Yeah, guys, I got a question for y'all. Maybe you guys can help me with this. This is like on the verge of narrative economics, but like, we haven't really seen a 6% GDP and then a 4% GDP scenario ever, I think, in the US. Like, I know the rate of change math and all that stuff, but like, I do wonder, like, regardless of what inflation actually is, if we go from 6 to 4.5, between like passive flows and some of these growth stocks that have been beaten up, I wonder, maybe quad four is not as deep as we all think. We have this shallow and deep dynamic. I think there's a lot of smart money that's preparing for that. But I do wonder, every year there's a surprise, right? And so like whatever we're thinking right now that we feel is kind of consensus or the math adds up, I have a feeling something's going to throw a wrench in our way. I don't know what it is yet. So I'm following the signal, right? I'm trying not to lead with my narrative, but I do think that it almost feels too easy when the whole world sees that there's going to be multiple quarters of quad four. We clearly haven't even gotten to the real pain yet, but like when everything is one way in that respect, I wonder how that could change, whether it's policy, whether we get more capital injections or whether we get something else that happens that that changes that dynamic. I don't know if it's a question, but I just wonder if you guys have been thinking about that.
Well, Jimmy, I think many of us probably think about that nightly, right, or daily. It's something that everybody thinks about. From the standpoint of Keith addressing it, he is without question focused on the rate of change. It is not the absolute level; it is the rate of change. He's said that numerous times. When you look at the deficit in terms of what the government is no longer spending or investing, the gap, it's enormous. I mean, it's a big hole. So even though the number might look like a 6 to a 4, I think that's still a really big deal. But obviously, as you noted, the signal's going to tell us, right? So I'm not gonna. I think if anything's if I've learned anything last year, getting smacked by being too late to a quad, that what I've handled the best is straddling the quads. I think the markets are moving. The markets can move exponentially faster than most of us can move from the standpoint of pricing in the next quad. So what you can see in a couple days, you might get smoked and not recover. So I think it's one of those things where you have to play the signal. I've straddled the quad. I think most of what I'm hearing here, most guys are kind of thinking the same thing, but you also have to be ready for that innovation. You know, when markets do go haywire, and assuming they do, right? Your question is, what if they don't? If markets do go haywire, what is the innovation that the Fed throws at everybody? My narrative, if you're going to talk narratives, has been the inability for the Fed uh, to save the markets with the SPIVs legally, right? So CARES Act of last year, December 28th of last year, got rid of the Fed's ability to use the SPIVs to buy corporate bonds and junk bonds. So what is the backstop for that? That I don't know. The only way they can do that is with congressional approval, congressional and Senate approval, and you're dealing with congressional and Senate approval heading into a midterm election. So my fear is, well, my thought, concern, narrative is it'll take very few Republicans are going to want to hand Democrats a perceived win, right? If markets do go quad four, second quarter into third quarter, but second quarter starts to become pretty damn ugly. Fed tries to intervene. Fed has no ability to cut rates to zero. So do they go negative? They can start up quantitative easing again, right? Buying back mortgage-backed securities, yada, yada, whatever. But even when they did that, it still needed the fiscal and the monetary to bring us out of the hole from last year. Is this quad four deep enough as to where something needs to happen from the Fed? And what can the Fed do legally? Do they cross many red lines? I don't know the answer to that question, but I think that should be on everybody's mind. My concern is, what can they do legally? And then if they can't do what they did last year legally, what do you get with Congress and the Senate? Because that is a real thing, right? And that's kind of what happened in 08 when you needed Congress to approve the TARP and all that bullshit back then, right? So,
and Jimmy too. I mean, I wasn't part of Hedgeye during this junction, but I know kind of Quad 4 was called in late 2018, and it took basically a number of quarters to sort of really kind of the market to kind of really play it out, right, and sort of start baking it in from he's mentioned this in terms of, or Keith has mentioned this in terms of the 10-year, right, kind of being a little early, and it was painful. The first few weeks, probably, in reality, it was probably a month to maybe 2 months. I don't really know because I wasn't around. But you could, yeah, go ahead, Chris.
There was two bites, because basically it would have been going into quad four in. Let me get it right. It would have been going into quad four in Q2, but then you had everything that came through off the back of
COVID.
Through from 27. No, in 2018.
Oh,
so it would have been quad four in Q2, and then everything that came forward because of the Trump tax cuts and everything, obviously, just powered straight through that and pushed everything back into Q2 again, quad two again, and then the call again was at the end of September. So for Q4, quad four and Q4.
Yeah, Jimmy, and you mentioned stuff too in terms of from a more kind of like a younger demographic standpoint, the student loan debt, right, and the fact
that's kind of been a moving target.
And that's been a moving target. It's been pushed out, I think, another month, I believe, and so if they come back in with a big old bill, right, that basically
10 to 50 grand. I don't know that it's going to pass or has the support, but they've extended till May, and then there's maybe some additional. Who knows?
Yes, who knows, right, Jimmy? But I mean, that would be a huge. That would be a big deal, right? And I think that could impact kind of the growth parameters around that. I think from a portfolio allocation. I think from a portfolio allocation standpoint, the way at least the way I'm approaching, the way that I'm thinking about it right now is obviously the signal is key, but then also looking at items or getting exposure to areas that kind of work in that. Because again, I mean, if you look at the quad map, it's sort of a shallow or narrow, quad 1/quad 4, right? I mean, basically, in almost the next 3 quarters. So to me, that's kind of the more definitive roadmap for certainly for the near term and for the kind of potentially 3 to 9 months here and going into 2022. And therefore, I mean, again, Hedge I think just put out a great note, kind of a combination of the XLK and REITs, right? Or ITB, or however you want to get exposure to it. But, probably home builders would be a better one, given the supply constraints and that kind of stuff. But, I think just strategically looking at some of that exposure, right? And rotating away from, so again, I don't want to, I'm not picking on you, Jimmy, but just, rotating away from some smaller caps that might just not, function as well. There's going to be some winners in there, obviously, in the small cap land, but, going kind of a little larger cap growth, larger cap, a little less beta, right? Maybe some defensives and or some dividend type exposure, right? Which all kind of work well in sort of a, narrow quad 4 environment. That's kind of how I'm thinking about it and positioning it. But I think you're going to get likely a pretty telling sign from I suspect both from Keith, like next week, in terms of, whether or not we're shifting at all, or if, or from the market. I really do think that, again, as I mentioned, kind of 20 minutes ago, these sort of kind of selling stuff and going a little bit short here, to me, if that doesn't play out within the week, then it's not playing out in the next few weeks, and it could be basically into options expiration again, right back into the back half of January. But that's like 3 weeks from now. I mean, that's basically that's like potentially two ball games, basically, right from now. So I don't want to be on the wrong side of that. Sorry,
I think as well, part of the I know I shared some chart. Well, I shared them with Joe, but they were public. I just don't know, because I'm going back over all these back tests, trying to build my own version of the quad, so you can just put in the ETF ticker and it will give you what the quads were and everything as the parts that I've shared in that new dashboard.
Which has been awesome, by the way, Thousandaire.
Since the last 2 years, one of the charts is what the expected value and the percentage positive would have been. If you go back to 2010, it will show you what it would have been for XLK or whatever, and how it's changed. And the two big massive ones that have changed have been XLE, which has just fallen, and XLK, which has just gone up. Mm-hmm. But part of that, because this is kind of when everyone was talking all politics and all that sort of stuff that I have no idea about. Like, in the back of my head, I am a bit of a fanboy. I'm going to just put that out there. I can just hear Mike Green just talking in the back of my head saying it doesn't matter. Do you know what I mean? Because I know two doesn't make every, but V bottoms on December 24th, 2018 and March 23rd, 2020 shifted all of the back tests for quad 4 for all of the equity exposures because it came so quick.
Right.
So if you look back now at the quad 4 back test, if you look on those charts, I'll share them. Almost everything shifted up by 2%. The expected return shifted up by 2% in a quad 4. So a quad 4 for equities looks quite a lot different than it did going into 2018 now. And I just wonder how much, how much impact does what happened in 2015 on a quad 2? Does that have as much weight as the one that we've just had? That's what I'm trying to figure out now. Is everyone says, oh, you have to have a back test, but how far do you go back? Do you have to have 20 years? Do you have to have 40 years? Or even if you have 40 years, do you only use the last 5? Do the last 5 matter more?
If I'm a fan of Mike's as well. I've DM'd with him a handful of times, and his work is I think it's special. I think if you follow the hedge eye thought process, but you also follow what Mike Green says, I think that you have, and again, this could be a narrative, right? So I think you have that initial shock, right? I think you have the initial downdraft, which could be what was Q4 2018? It was about 3-4 weeks. That's what it was ultimately, right?
Yeah.
But it was about 20 some odd percent in terms of a quick drawdown. So if you can miss the initial drawdown, then and you then take Mike's work into thought, even if you're down 20, even if markets are down 20-30%, you then have that much capital to allocate back into markets to test the theory, right? You can put 50 to 70, 50% of your capital, 60% of your capital back in, all in, and then you can see if markets still continue to draw down. You're still crushing indices by that metric, right?
Yeah.
So yeah, I understand what you're saying. How much of the passive, at what point in time does the passive just dominate? And I think Mike says over 50%, right? Or am I wrong in saying that?
Yeah,
Yeah,
he
it's
does,
great.
and it's
Yeah.
already over 50%, right?
No,
And
it's not over
another thing
50% yet.
is it not? I
It's
thought
not
that's
over.
what
I
hedge
don't
I
think
was
it's
showing.
over 50%. I think it's close to 50%, but I don't think it's over 50% yet.
And another thing I saw, going back to Chris's point, so you're basically trying to say like IT work, XLK might work in quad 4 regardless of what happens, just because the back test is showing you that. And to add to that, another thing I noticed last time was in March when everybody was like talking about how market is crashing. The Norwegian sovereign wealth fund, which is I think the biggest in the world, was buying crazily, like into Google and all these things versus anything safe. So that
I
could
think
be like,
I think part of that is these big tech names are basically like 70 or 80-year bonds, right?
exactly,
So if you're
and the
if you're
bond yields are so low, and the capital gain on it, the upside is not that much in their based on what most of these guys are talking about. They rather buy Google and like FANG stocks, and I think that's what you're basically seeing in your data, right?
I mean, the sovereign wealth fund can buy whatever the hell it wants, but if you're no, I don't mean that. I don't mean that in a rude way. I mean, they can buy whatever they want, but if you're in an equity only fund, you don't have the mandate to buy bonds, so you have to buy what you can, right? If you're big enough, there's only so many utilities you can buy.
Yeah,
because
you have to diversify. I mean, you can't over allocate to one asset, to one security or one asset class. Yeah.
If you look at the grand scheme of things, the central banks can't afford to let it burn down, right? The Swiss National Bank has a greater equity portfolio than the vast majority of people out there. If BlackRock burns down, they take the whole market down with it, right? So you can't, I've talked to some people about this before when it comes to market structure. And, back before I even knew who Mike Green was, I wrote a piece called Moab, Mother of All Bombs, talking about 2020 being a year where fallen angels destroy markets based upon ETF structure and passive ETF structure. And when BlackRock's out there talking about passive ETFs and how great the liquidity was, yet they were handed a $75 billion blank check to bail themselves out, you got to ask yourself, how does a bond ETF provide instant liquidity when over 10 to 15% of their portfolio by prospectus can't be liquidated in under 7 days without severely adverse effects to market price? And the answer is you can't. You can't provide instant liquidity without that adverse effect of market price when 10 to 15% can't even be sold in 7 days. So these ETFs were bailed out with a blank check, and they needed to be. So if you go too long, if the Fed goes too long, as Keith is always saying, these guys are going to be on the phone with Powell saying, you got to do something. So there comes a point in time, and that rescue always happens faster, right? So if we do enter a quad 4, you have more active guys selling into passive, which is not buying more than they're already told to by algorithm. You have that drawdown, and then that snowballs on top of itself until whatever innovation comes. The question becomes, what's the innovation? They have to do something. That piece, that Politico article, well, I'm not a Politico fan. That Politico article on Honig was a great piece. It was a great write-up because they can't stop. If they stop, the house of cards comes falling down simply based upon market structure in and of itself. If you understand Mike Green's work, and I know Chris does, so yeah, it's all market structure at this point in time. But it doesn't mean that you can't prepare yourself and make money in those quad 4s to bounce back for when that innovation comes.
Yeah, spot on, Mitchell, from Other Side Asset Management. Eric, you asked to speak. Was there anything on your mind?
Yeah, so I wanted to just throw out a couple of things. My view right now is shallow quad 4, which is heavy REITs and some other things, as y'all know. One of the things that's an anomaly right now to me that I think y'all have touched on is if you run a relative strength chart of XLK to SPY, it's by far the strongest sector ETF out there. Going back to the discussion that was just being had, I view Fauci's drop of the quarantine to 5 days as a large scream that the administration is scared to death of the upcoming elections, and they're going to do whatever they can, even if it doesn't look intelligent, to do the best they can to get votes. And then the last thing I'd say is with the quarterly options expiry this Friday and VIX approaching the bottom end of the range, I think for a cup of coffee, as Leslie was pointing out, for a cup of coffee, you might, I'm considering going long VXX and holding it to see what happens Monday morning, and then jumping out if it doesn't go anywhere. So those are my comments.
Very, very well said. And a good synopsis. Yeah, no, I think you're spot on. In terms of the politics, who knows what's going to happen? But yeah, it's pretty interesting that the CDC all of a sudden, dovetailed into, shortening that quarantine period and that kind of thing. That came out, I think, yesterday or this morning.
Because science, right?
Yeah. So, Chris, did you have a comment, or anybody else out there? Anybody have questions?
Does anybody have any idea on this, like, OPEX coming up on this Friday, like how the JP Morgan trade would be structured? Like Spot Gamma has been talking about it. I would love some clarity on exactly how it can affect. Like the guy was talking about on Monday, the volatility can go up. I don't know if that means volatility as in VIX goes up or not, but he was like, this will be more bullish for the market given that September was like a call buying versus right now is call selling, something like that. Not like to be short of so anybody else can explain it.
Who are you referencing? Spot Gamma?
Chirp, are you referencing Spot Gamma? Like, is that the Twitter handle? You're on mute.
Yeah.
Yep. I'm not familiar with Spot Gamma, so I don't really have a comment there. I do know that obviously the bigger options expiration was the 17th, right? So 2 weeks ago. But month end, year end is obviously still influential. Chris, do you have any, or anybody else? Joe, I don't know. Leslie follows a ton of options flow. Options Gunner, you're out there right now too. Anybody's got insight on flow or what they're seeing in the options space, greatly appreciated.
Yeah, I think what Chirp's talking about is the quarterly JP Morgan collar that's on the SPY. Yeah.
Spot Gamma had a video they released yesterday. If you want to go check their timeline on it, they
Okay,
Yeah,
great. Thanks.
Yep.
and it needs to
Thanks, Bill.
roll.
Appreciate it.
Yeah, so the rolling is what they're talking about, is the unwind can affect volatility possibly, depending on how the hedges unwind.
Yeah, and they're looking for.
Oh, so were they?
Oh, sorry.
Go ahead, Bill. Go
Just
ahead.
really
Go
quick.
ahead.
I mean, I don't understand the details. They're looking for possibly a move up on Friday and a move down on Monday based on how the gamma is working. In sort of what Leslie's saying, you could have a vol spike on Monday.
Okay, yeah, see, that's what I wanted to know, if I was like understanding it more correctly. So that's what I got out of that too.
Yeah, but I would recommend watching the video because there's so many things in there that I don't understand. That's tough stuff for me.
Exactly, and that's why I was wondering, like, if anybody else like understands it outside even Spot Gamma, right?
Yeah.
Like, there are people who actually understand options, so they can explain it
Yeah.
in their own words.
Well, and it's so known now. I mean, they've been publicizing this thing for a year now, pretty heavily on all these Twitter channels. So I don't even know how many people are front running, the gamma spike. That's where it loses me completely. It's like, how far in front of it do you have to get for it to mean anything, and then is it going to work at all? So I don't know.
To me, the spot to get in front of it was last Monday, right? Post the 17th, the options expiration, knowing that you had another quarter. Anyway, I don't know.
Yeah.
No, like if you actually listen to the guy, the perfect time based on his analysis of how the expiry works was Monday open. That drop was the time to buy. Like he says, like it's
on the 20th.
on quad witching, it's always on Mondays. Like I even had it marked. It's just when Keith went like sell or not buy. That's when I was like, okay, let's maybe see something I'm not seeing. And that's what the other guy, there's like other option expert who was talking about the same thing. He's like, there was an extra reason why this could have gone the other way and not recovered. So then I was like, okay, so that's what Keith saw, but I don't know what exactly they were seeing because they don't really openly discuss that kind of shit.
Yeah, and I mean, Brett Kachuba at Spot Gamma is insanely educated about all the intricate details with this. The problem is if one of us tries to put on part of that trade, we have no idea if it, how to manage it based on what's happening. So I just stay away from that stuff.
Yeah.
I try to use it to understand like what can actually happen.
Sure.
And how we can trade around it, or like buying aggressively. When should we do it, right?
Yeah.
I totally agree with you, Leslie. It's way over my head, but I did see a video last week where they talked about how every Monday after the biggest predictor was the Monday after the triple witching or quad witching is a down day at the start. That was something I could understand.
Hey, I love it, Bill. I love it. Just put it in plain English, right?
Yeah, thank you.
Exactly. Like that was the simplistic way of understanding that one. I wish like there was somebody who was like simplifying this a little bit more. It's basically like Kem, this guy, and then there's a guy named Imran who was a like options trader in UK. He did same job as Kem does. And basically, they are the ones who understand this kind of stuff, and they don't really explain it publicly that clearly. Yeah, that's the thing.
Well, they try to. It's just there's so much you need to know to even understand their explanations. So
second derivative, second derivative, third derivative. I'm like, okay, that's enough for me. I can't get past the first second derivative.
There's two papers. I found them a couple of years ago, but I kind of overlooked them and didn't really pay attention. It went over my head, and now it's sat on my desk permanently with highlighters and scribblings and chicken scratch all over it now. So they cover the vol and option side, but there's another part. So that's on squeeze metrics. So there's two papers, and the other part. Because anytime Keith talks about volume, obviously he talks about price, volume, volatility. is he never goes into in depth on volume. And just looking at the standard volume little ticky charts and stuff, it just seems too simple. And that's why I started looking at this, because they have this thing called the DIX chart, DIX. What it is
Yeah,
it's explained in one of these two. Yeah. Oh, you're breaking up. But...
Chirp, you're breaking up, man.
DEX and GI. I love that thing, man. Like, I'm trying to understand that too.
Yeah.
No, it's what he's saying. Yeah,
so that's why. So what I've been trying to put, so the charts that I make just use the standard volume, but there's basically a dark pool. There's another set of volume that's in behind all of this other volume. And that seems to tie more closely. Whenever Keith references volume, he's very cryptic about it, but it ties in more with what this other volume metric says than what just the standard volume chart on TradingView or whatever you use says.
100%,
Right.
100%. I think that's what he's talking about too. Because you have to pay a lot of money to get dark pool data, I think, and that's only like professional services usually have access to, and I think that's what he's talking about.
You can get it on Unusual Whales. It's included.
And you can get it for free. It's on FINRA. It's just the problem is the data is really, it's not put together very well. So it takes a lot of time to get the data.
Unusual Whales is pretty inexpensive, and they do a pretty good job of making it searchable.
Yeah, Whales does it. This is Options Gunner. Leslie's on point. So Whales has it. TradingTix has Dark Pool. Quant Data has it. There are a few. And so I think the hedge eye slides, as they're presented, I'm not 100% certain, but I don't believe those include the dark pool data. So I do scans from time to time. One of the things I do like to look at, and some people may not see value in it, and that's okay, is I do look at relative volume. So I'll overlay that with options activity. I'll look at relative volume. I'll look at vol as well, RTAs, that kind of stuff, just to kind of get a feel. So like we have days where
JD, can you just, for those that don't really follow that world, can you just expand on relative?
Yeah, so relative volume is just, it's pretty simple. I mean, it's really just looking at the volume for a given day. So today's the 29th. So say you have a relative volume of like 0.8, right? So it's not even a full one-to-one volume that you would see on any given trading day. You could look at it, I'm sure weekly, monthly, however you want to break it down. I do not have the time to go into the weekly or monthly because I think that's a little above my scale. But I will look at do a quick glance at the daily relative volume. So like Koifin is a great tool. They have that. It'll calculate it for you. If you look at market movers, you set up a watch list. I look at it just to be another little channel check or pilot check. So if you have, say, things in the energy name, right? Like people are shorting energy. WTI is bearish trend. You're seeing oil kind of go against people right now, or the energy names going against people. Well, I'll look at it. I'll look at the relative volume, right? And so if it's like not even 1%, not even 100% of regular volume, if it's like 80% of relative volume, but it's going up, I could chalk it up to, hey, it's algos having fun on a light trading week, a little short covering, people or junior traders are goofing around. But if it's like I'm getting squeezed on a relative volume of 3.5, that means you're seeing 3.5 times the normal day's volume. And if I'm short, that's not a fun day, right?
So what duration do you look
to say the least. So that's how I don't get super complicated about it. For right now, I mean, I don't have a fancy pants way. I'm doing it mostly on a daily because Hedgeye is looking at it daily. So I'm looking more so on a daily. I'll take a peek at key slides on.
One day.
Yeah, I'll just go 1 day versus 1 day. Yeah, that's basically it. And it's like I'm not going to say it's the most scientific way to do it, but I do notice multiple services do offer it. Day traders look at it. And so I just look at it, particularly if I'm near if there's a something that's bothering me, so like if say energy is bothering me, or say crypto, not the crypto itself, but the names like Block or whatever, Mara, whatever, they're bothering me. I'm gonna look at those things and be like, what the heck? And look at that with the risk range, look at it with volume, look at it with relative volume, and kind of try to make an informed decision. So sorry for blathering on, but
I love that.
Yeah.
And are you looking
So I have
for like
on the
let's
charts
say
that
one
on the
day
charts that
over?
I
Are you
share, that's
looking
on the
for
volume
that
section.
it will go?
Hey, chirp. Sorry.
Oh.
Hey, chirp. Can you just hold on 1 second? Go ahead, Chris.
Oh no, sorry. I was just going to say, in the charts that I share, that's in the volume section. So when you see volume versus 1 day, 1 month, that just shows you the last trading day versus
That's awesome.
So versus the 1 month average. I actually wanted to. I'll let Chirp carry on, and then I'll.
Yeah, Chirp. Go ahead, buddy.
And are you looking at, like, let's say 1 day over 1 day, there's a volume spike, right? And the stock went up. That's then you're looking at that as a positive. Whereas when it goes up and the volume is lower day over day, it's a little bit more negative. Is that how you?
I tend to. It depends on the quad too, right? Because like if we're in a reflationary, like say we're in quad 2 and something's going up on light volume, we're all probably pairing out a little bit as it's going towards the top of the range. But if it's like a quad, say it's like a quad 3-4 type setup, and I'm short something and the relative volume is pretty light, it's gonna bother me, right? But I'm not gonna like go bananas on it, right? You say I'm short. If I'm going long and it's any quad setup and I have this relative volume and it looks pretty good, and options activity is also really good, then those are really cool. I tend to say sometimes I'm going to take some of the equity off. I'm going to pare down a few basis points, but I may leave an option on, or I may put an option on that's short dated at the top of the range just to see what happens. Something very small. It's very small. So, yeah.
Just to add on to that, this is the part where I think these dark pool indexes matter, because you need to read the paper, but it's basically a short selling, but it doesn't mean that you're going short the stock. It's that volume relative to the total market volume. Sorry, like in anything. So if it's Apple, it's the total traded volume in Apple against this dark pool index volume, and depending on the relative amount to itself. So if it's depending on the range, it will trade between 20% and 40% of the volume will be this other dark volume. And obviously, if it's 40%, then that shows you that people are buying. It's probably better if people go and read it, and I'll write something about it later.
Yeah, nice. Cool.
No, that's perfect.
I don't know if people saw, a few months ago I was writing on the arena at the time, but no one ever goes there really. It's getting really quiet. But I was writing about high beta, and it was I wrote the piece basically trying to say how we see things. And obviously, because we're humans and we want to look at little objects on a screen, or, we survived through history trying to, if we were really good at spotting snakes, which was our biggest thing that was going to kill us, then you survived. And if you look at a chart on a screen, it looks like a lot of snakes. So you want to see wiggly lines everywhere. But the computer doesn't look anything like that. It just looks at a set of numbers. It doesn't even have a screen. It's just looking at a set of numbers, right? So when it sees Apple, it just sees total trading volume, 1 month price momentum, day, blah, blah, blah. It just sees all these numbers. It doesn't look at a screen. And part of that is just on the volume side is obviously had this massive volume spike at the start of the month. And pretty soon, over the next 4 or 5 days, all of those big high volume days are going to move out of the 1 month look back. So as all those big high volume days move out, and the price going down, as those volume bars move out of the look back, naturally against the 1 month average, the volume will start to move up because those big numbers are going to fall out of the look back. Does that make sense?
Yep. Like I just pulled up the dark pool for Apple, right? And you had big volume on 14th, pretty big volume on the 15th, and December 17th, right? So what you're saying is kind of as we enter into mid-January or the back half of January, those are going to start to fall off, and then the look back's going to say, okay, the volume, the month over month volume is going to be a different component, because now the last week it's been, the dark pool volume has been pretty much near at its lows for last month, going back to November, end of November.
Yeah.
For sure.
So naturally, volume versus 1 month is going to start going up.
Mm-hmm. Right. And Schwab is telling me that today's volume on an average 1 month is basically 62 million shares versus 120 million, the average volume for last month. So you're at basically 50% of volume on an Apple that was flat on the day, but it's up pretty significantly. It's up obviously 14% in the last month, and that kind of thing. So you've had some big high volume days, but then some positive momentum there on pretty low volume as well, certainly in the last week, which to me is telling. And again, Apple has been a beast, and you definitely have wanted to be long of it. But that's kind of another reason why, to me, XOK is nearing the top end of the range and looking to be more of a short than it is. I want to stay long this thing, and or just sell it, right? Like they just basically trim your gains.
I could be completely wrong. I look at it the other way. That this thing could be one of those where it sits at the top of the range, and then as this incremental volume, like I said, the total volume might not be going up, but just because the volume on the shorter lookbacks will start going up purely based on these big numbers falling out of it. Some of these things could go right up straight, like just go straight up through the top of the ranges.
Interesting. All right. Well, I'm going to keep that fucking thing on a tight leash then.
Nice.
That's another thing. Another thing as well is quad one. There's so many. I don't want to say there's so many because there's not. But I wouldn't be short in any equity in quad one. Just personally.
Yeah,
the expected returns.
The best performer. Yeah.
It's completely different. I'm trading for my income. I don't have like some big massive equity portfolio that I'm trying to protect, which burning some premium on a put might, depending on the size of your account, that's fine. I'm not in that position, so I'm not doing it. So, but outright shorting thing, I don't know, just me. I wouldn't be shorting stuff.
No, I think it's important, Chris. So, if you don't mind expanding on that, I think it's really, really important, right? In terms of figuring out because everybody's views and the way that they're approaching the portfolio is different, right? Like mine is primarily retirement account money, right? So, it's probably 75 to 80% retirement, and then about 20% is sort of a taxable account, so a long short account, right? So kind of a margin account. But I also have a day job, right? So I am not relying. I'm more so, deploying the hedge I process for minimizing drawdowns in my retirement account and also increasing, my basically, long-term capital appreciation over the next 30 years of my career, right? I'm a 30. I think we're similar. I'm 37, and that's kind of my current setup, right? Is that environment? But then you've got folks like yourself, and I'm sure many others here on this call, and I know Jimmy is similar in terms of, he is, it sounds like you guys are both kind of relying on it for some for some income stream, right? In terms of providing for the family. I know you have kids, and so does Jimmy.
I was. Now I'm
But
just a
yeah,
long-term investor, Robert.
right. But I mean, but the process is similar, right? Anyway, so I think I think it could be an interesting kind of segue, Chris, if you don't mind sharing a bit more into that thought process, or sort of the investment, like the investment there, right?
So what? As in what? My personal like?
No, sorry. I mean, you're saying you're right. So I mean, you're saying you're relying, you're trying to provide income, right? So you want to be on the right side of the trade versus sort of trying, for instance, in terms of what I'm currently doing in my retirement account is I'm leaving on some XOK exposure, right? So I've got about 200 probably about 250 basis points at this point after today of XOK. But I've also put on basically inverse tech, like bear exposure, so TECS, and I'm at about 100 basis points. So call it a 2-to-1 ratio, right? In terms of basically my long short in terms of my retirement account, because I am not, I'm seeing low volume grind higher, and Mitchell has mentioned this too on like basically passive funds that I don't see lasting into next week is what I'm seeing out there. But, I could be completely wrong. And as I've mentioned, I will keep that short tech on a very tight leash because I do believe it will, it still should perform well in Q1 and going into, maybe a Q2, right? I mean, like basically guys will pile into, Apple and Microsoft kind of like, it's, obviously they're going to have drawdowns, but there's still going to be exposures that general portfolio managers are going to want to have exposure to versus, no offense, Jimmy, but like a small cap like Ooster, right? Even if their 5-year outlook is phenomenal. So I think it's like a little bit of short term and then longer term. But then when you're looking at it from a bit more of an income source, I'm just curious as to kind of like, did you position yourself? Like, did you just add into this strength or this like in terms of Apple today or last week?
Yeah, so I'm not not Apple itself, but I'm long. I've added to calls on the Nasdaq.
Okay.
And the reason why is if you look at the so I use these little drawdown tables instead of looking at price. I look at the drawdown.
Mm-hmm.
If you do one of those, the IVOL premium discount.
Mm-hmm.
The discounts very rarely go below 25, and that's where we are right now.
Yep.
So I look at that now as looking, if you've seen my charts, that's like pick something random. XL question mark is down 4% and from the 1 month high, and it's bounced 3 times in the last 6 months at down 4%. So I'm looking at that the same way for the IVOL discount. The IVOL discount very rarely goes below 25%, minus 25%.
Right.
I got a question about that. I know it's different for individual securities, but I noticed even for mega cap tech stocks, like with the exception of Apple, like the realized volatility, especially in the second half of 2021, was towards the top end over like 3-year periods. You had like Google, Facebook, kind of in the 30s plus. So I wonder how much of the market, even on low volume, is kind of saying, hey, we don't think that realized volatility that we saw over the last 30 days, over the last 60 days is sustainable, versus kind of that frothy, push to the top type of mechanism that would make me more cautious about these big eyeball discounts. I'm sure the truth is somewhere in between.
I think as well, I've lost track of the amount of times, and people keep taking the piss when I say it on the arena. It's never one number. That there's lots of ways to get that IVOL discount or premium number because you're moving 2 variables, right? It's like coming from a reformed gold bug, looking at the gold to silver ratio. Over the last month, there's been plenty of people in cryptos talking about the ETH Bitcoin ratio. And it's like, yeah, okay, the ETH Bitcoin ratio can go up from here, but it can go up by Ethereum going down 10% and Bitcoin going down 20%. So you can be proven right, but your net worth will be going down 10%. Does that make sense?
Yeah, totally.
Because you're moving two components, you can get one number to move in any number of different ways. So what they're trying to say is the ETH Bitcoin ratio going higher validates their position that ETH is better than Bitcoin. And when I tried to explain it, and I said, yeah, but they could both go down, but Bitcoin just go down more than ETH, and that number could go up, and you're validated, oh, ETH is better because it went down less. It doesn't mean you made any money though.
Right.
Unless you're directly putting swaps on ETH Bitcoin cross, but very few of them have. They're just in camp ETH and just long ETH.
Yeah, and I think just back to the eyeball premium discount math. I mean, we were in a period where the S&P was 20 to 29. We're chopping. So now that VIX is back in the kind of the high teens, it broke 17 today. Just the math on that alone, right? 17 over whatever 25. You're talking about like a 25, 30% discount.
But what that also means is it means the VIX could move, depending on how quickly it moves. The VIX could move, and the price, it might not be reflected in the price of some of the underlying assets. Because we went through that period as well, the last 6 to 8 weeks ago, where the VIX was just grinding higher, slowly just grinding higher, and everything was still going up. That's what I'm trying to say, is that these numbers, if people focus on just one number on a chart without understanding how the number's calculated. That's what I tried to do when I tried to show everyone how people just look at the grid chart, or to use that word, but the quad chart, and just see, oh, XLU goes up 4.2% in quad whatever. And it's like, yeah, but how do you calculate that number? Because there's two components. There's a component where it's positive and a component where it's negative, and it just happens to come out with a positive number. But 20% of the time, it's a negative number.
Yeah, you mentioned this. I think last week too, right? It's which is interesting. I think it was a bit more in reference to kind of quad 2 in Q4 here, right? Where you had stuff like a consumer discretionary that has somewhat underperformed, right? But in general, I think that's right. Hold on, let me just make sure. Yeah, it's underperformed, so it's down like 61 basis points in the last month, right? So it's gonna influence, right? It's gonna negatively influence this quad 2 for consumer discretionary, right? Like XLY.
Well, there is that, but like in the post, I can't remember if I put it in a post or a video. That part directly on XLY was to say that in the move that it had, obviously everyone was sort of saying, oh, it's quad 4, everything, quad 4 is being priced in. And the point I was trying to make was that if you look at the expected return for quad 4 for XLY, it's basically priced it in. It was about 6%.
Right. Okay.
It's like, well, it's priced that in, and if we do go to, and if it does go full on quad 1, then the expected return was something like 0.23%. And it's like, so it was when the talk was all about, the market's going to quad 4, we're going to quad 4 early. It's like, well, if it is, a lot of these things are saying it's kind of priced it in. Yeah. And a lot of these things that you're saying, oh, Keith's missing it. Keith's missing out on XLU or whatever
like
else.
XLP, like consumer staples. Yeah.
It's like,
yeah.
Oh, Keith's missing out. And it's like, well, it's kind of priced it in.
Right.
And if it does go to quad 1, then both of them just don't really move. It's like 50-50 positive, negative, and like 0.2 or 0.5% return. So
right.
You could be piling in just at the point where it's gonna go flat, or at least on a relative basis, underperform.
Right, like trade sideways, call it. Yeah.
Exactly.
Yeah. That makes sense.
And Keith also mentioned last week he was in both of those. So it's not on risk ranges, but he said on the macro show he was in both of those.
Yeah.
Because
So he's not
followed the
missing.
signal.
Yeah.
It was just you can't, not always. I don't want to say always, but it was the same thing that happened in. I mean, it was right in June, but the same thing was being talked about in March and April. You know, we're missing out on gold. We're missing out on utilities.
On treasuries, right? It was
Yeah.
like the bond, bonds. Yep.
And it did. It outperformed for like a month.
Yep.
And then underperformed for like 3 months.
Yep. Yep. It certainly did. Interesting. Okay. I like that.
But yeah, it's my Betty Bobo's time.
Yep. There's anybody else have any other comments? Otherwise, I think that's a good note to kind of end on, right? Just
No, thank you, Robert, for always hosting these events.
Yeah.
It's been a hell of a year.
Thanks, Robert.
Yeah, it really has. I mean, we started these about 5 or 6 weeks ago, Jimmy. You know, you, Gavin, and I, and a number of others like Leslie and Chris, and a lot of chirp. You know, a lot of friendly faces out there kind of joined over the last few weeks, and we'll continue to obviously continue to do so going into 2022. It's been a lot of fun. You know, this all started from just a random kind of tweet because I like reviewing my notebook on Wednesday nights, kind of assessing what I was expecting or kind of what I reviewed on the weekend, going into the week. You know, reassess midweek to see if I need to pivot or kind of change aspects. You know, going into the back half of the week, kind of setting up for the following week, right? So, it's been a lot of fun. Obviously, we got the shout out from the Mucker on the macro show last Thursday, which was very cool. And I'll do my best to post these to the YouTube page, but I do have to do a bit of a workaround because I can't record quite yet from Twitter. But I'll obviously let everybody know, and then 1,000 there.
Yeah, that's because we got to get you more follows, right?
I think so. I'm still a little uncertain. I think it still is a bit in the beta mode. But yeah, I mean, Jimmy found something that said that kind of the 1,000 followers is the magic number.
But you're at 853 now.
Yeah. So, I mean, yeah, right. I mean, but that comes with a lot of pressure, though, Jimmy. You know, you got 1,000 people following you. It's, I don't know if I say that much. That's interesting.
Stop,
the day,
Robert.
but,
you can handle it.
Thank you. But Chris, you mentioned 2 papers though that I'm very curious about. So if you don't mind either tagging me in them, again, it doesn't have to be at night, but tomorrow morning or tomorrow anytime, really. Obviously, but I would love 1 to read them and 2 to kind of reshare them with everybody that did listen. I think they could probably they could benefit from those. And yeah, man, we'll keep at this next week and go from there. But obviously, thank you everyone for listening. Greatly appreciate it. Hopefully you found some good value in this chat.
Yeah, thanks, man.
Thanks, guys.
Awesome, buddy. Yep.
Thanks, guys.
Later, brother.
Cheers, everyone.
Happy New Year, everyone.
Happy New Year.
Happy New Year.
Absolutely. Enjoy. Peace out.